Hi everyone, Jasper Basson. Yesterday was the budget speech for 2020, and with a few surprises, and but mostly everything remained the same. And if you can remember, I think that if you were looking at some of the proposals or the projections of some of the companies, and most of them and most of us expected a VAT increase of a 1%. And I'm very glad to say that VAT is still at 15%. It didn't increase. Was a quite surprise for me. And in the same sense, the VAT threshold also didn't increase. It's still 50,000 rand if you want to voluntary register, and 1 million rand if you for compulsory registration. One of the biggest shocks, I think, in the speech was the proposal of limiting the interest on loan accounts in corporate companies, PTYs and CCs, to about 30% of the interest or based on earnings. And then the biggest surprise that I think everybody's looking at and is the limiting of the assessed loss in companies. So previously you could up to today you can utilize the assessed loss that you made potentially in February 19 and utilize it in the net profit that you generate in February 20. So what they propose is that you only be able to use a portion of the assessed loss against your current taxable income, and more on that a bit later in this conversation. So let's go to some of the screenshots I've made, and I've highlighted some of the important and ideas and things that stand out for me. I've highlighted, and I will go through that with you. So let's go. Thank you for watching. Just a quick reminder to grab your gift pack for entrepreneurs in the link below. It's a gift pack for entrepreneurs to the value of 57,000 rand, free of charge. All you need to do is activate it. Part of that gift pack for entrepreneurs is a voucher of 3 months for 3 months free accounting services from a company, Dryk Holdings. All you need to do is activate the gift pack voucher in the link below, and we will be in contact with you as soon as you've done that. Right, let's look at some of the changes that happened yesterday in the budget speech. The very first one that I want to mention, and that was actually a very positive change, was the transfer duty. And the transfer duty up till February 20 was that 900,000 rand that I've colored in blue. So if you bought a property of 900,000 rand or less, there were no transfer duty on that purchase. And they've changed that threshold to 1 million rand. So from the 1st of March 2020, when you buy a property of 1 million rand or less, there won't be any transfer duties on that. So that's a very positive change on the budget speech of yesterday. I'm going to skip some of these things. Estate duty remained the same. It's still 20% rate on the first 30 million, and then 25% above 30 million, and with a basic deduction of 3.5 million. So it's the first 3.5 million of the asset liabilities are exempt from estate duty. Right, let's just go forward to some of the other actual changes in the budget speech, and that is the tax-free savings accounts. Up till 28th of February 20, you could invest 33,000 rand in tax-free savings accounts on an annual basis, and they've changed that to 36. So you can invest that 36,000 rand annually, and you can obviously receive tax-free income from that savings account. The next positive change that we will go to is more towards inflation really than it's really anything else. It's a small business corporation where the net profit, the first portion of the net profit up to 83,100 rand is tax-free. And then the second step would be 83,000 to 365,000. There would be a taxable amount of 7% above that initial tax-free net profit portion. So it used to be about 78,000 rand. Now it just, with inflation, went a bit up, and it's 83,000 rand, 100 rand now. So if you don't know what a small business corporation is, I've done a video in the past as well about that, and I will definitely do one in the near future again. But if you want to have more information, and if you want to find out if you actually if you can register or activate your business, your company or closed corporation as a small business corporation, feel free to contact me in the description below or the comments below, and I will be in contact with you to discuss your specific situation. The capital gains tax currently remains the same, but they are definitely looking at reviewing the capital gains tax inclusive rates, but currently it's remained the same. Just to quickly mention again, as a reminder for us, the first 2 million gain on the primary residence on the capital gains are tax-free. Most personal assets and then also small business capital gains of up to 1.8 million for individuals when you're at least 55 years old are exempt if you're a small business. Annual inclusion remained the same, 40,000, and annual exclusion granted for year of death is 300,000 rand. Right, just a quick mention just to remind ourselves. Right, and probably one of the biggest changes in biggest surprises in the tax budget was assessed losses, that I'm going to touch now, and excessive corporate interest deductions. So they want looking at capping the interest charged in the financial statements to, it seems like, 30% of the actual earnings on the assessment for any period after that 1st of January 2021. So that's merely a measure for them to try to cap the interest that you claim and potential movement between companies and out of country companies to limit that. Right, and then I mentioned, I think that's probably the biggest, let's call it, shock to everybody on the budget speech, is the limiting use of assessed loss in a company. So currently, just to review, currently when you have an assessed loss in your company and you earn an income or a net profit in the next year, you can offset that assessed loss of the previous year on the current year's net profit fully. So what they proposed from the 1st of January 2021 is the following. The government proposes broadening the corporate income tax base by restricting the offset of assessed losses carried forward to 80% of taxable income for years of assessment commencing on or after 1st of January 2021. So in essence, you won't lose the assessed loss, but in my opinion, in the short term, SARS want to utilize additional funds through corporate tax by limiting your deduction of your assessed loss to only that portion mentioned right now. So definitely something, if part of assessed loss was part of your tax planning, especially in the next year, definitely need to sit with your accountant and review the potential tax implications and that you may have regarding because of the assessed loss. So definitely be in contact with your accountant. You can also be in contact with us. Just leave your details in the comment below. Right, so further on, there was the foreign remuneration exemption. So that's foreigners that work still tax residents, but foreigners that receive foreign income, not foreigners, South African tax residents that receive foreign income will be increased from the million to 1.25 million per annum from the 1st of March 2020. So slight increase in that new cap, and I'm sure everybody that earn income out of South Africa will welcome that. And then, quite interesting, they're looking to reform the pay-as-you-earn process and simplify that, which in my opinion would be amazing for accountants and for the clients, and have a more automated process And like I said, they say inside here as well in the blue, in addition, employees will be able to monitor their tax obligations during the course of the year, and the annual return process of the employers will be simplified. So it will be a much more real-time process, and for everybody to be able to view the tax obligations and etc. Further on, no real other too much of changes. I just want to see if there's anything else I quickly want to mention. Lastly, something I've seen a lot lately is that SARS really looking at the corporate admin penalties as well for the corporate tax companies and closed corporations that start levying the monthly admin fees. And it seems like they also want to, if you fail to submit your income tax return, to actually work on an estimate and send you assessment based on the estimate that they believe that you need to pay tax for that specific year. So it becomes very important to truly be on time with your tax returns and make sure everything gets submitted correctly, to make sure to ensure that SARS don't do an estimate of tax assessment. Obviously, it can be changed potentially afterwards with a notice of objection, but it can cause a lot of frustration and in most cases a lot of stress for clients if there was an assessment tax payable that they haven't been budgeting for, and that's potentially totally wrong. So very important to keep that. And this lastly on the interest and foreign dividends, mostly the interest rebate for individuals less than 65 is still 23,800, and above 65 is still 34,500. So nothing changed here. The biggest change overall, if we can scroll back, like we said, it was the interest that they want to cap on loan accounts and deductions in the corporate companies, and then also the assessed loss that they want to also cap and apportion according to your taxable income. Thank you for watching. Just a quick reminder to grab your gift pack for entrepreneurs in the link below. It's a gift pack for entrepreneurs to the value of 57,000 Rand, free of charge. All you need to do is activate it. Part of that gift pack for entrepreneurs is a voucher of 3 months for 3 months free accounting services from a company, Dryk Holdings. All you need to do is activate the gift pack voucher in the link below, and we will be in contact with you as soon as you've done that.